bill of exchange. It is complicated, but if you understand the gist, then it will become an easy one. We have discussed about journal entries for bill of exchange in our earlier video. Now, in this content, we shall see how to solve a practical problem. If you have not seen the first part of this chapter, the link is in the description box. Please check it out first. Hello everyone, welcome again to the Science of Accountancy. Let's make some fun. So here is the illustration. Many of us get nervous with the size of the illustration. But believe me, if you do it part by part, then it seems to be easier. So first we shall go through the illustration thoroughly and try to understand what exactly we need to do. Here at the last line it is instructed that we need to do the journal entries in the books of the related parties. So it is clear that here our duty is to purge the journal entries only. If we need to show the laser posting in some other illustrations, we simply post the journal entries into their respective lasers. You know how to do the same. If you don't, please refer to our earlier video on laser posting. However, as I told earlier, we shall try to solve the problem part by part. So the first part is, on 1st April 2023, Mr. A sold goods to Mr. B for Rs 1,20,000. Mr. A received Rs 20,000 in cash from Mr. B and drew two bills, first for Rs 60,000 and second for Rs 40,000 of 2 months each. Mr. B accepted both the bills. By it, we can understand that here Mr. A is the drawer and Mr. B is the drawee. Now let's understand the problem. Mr. A sold goods to Mr. B for Rs 1,20,000. And against this, Mr. A received Rs 20,000 in cash from Mr. B and drew two bills, first for Rs 60,000 and second for Rs 40,000 of 2 months each. Mr. B accepted both the bills. Now the journal entries. First we shall see the journal entries in the books of the drawer, that is Mr. A. For goods sold, the journal will be Mr. B account debit to sales account, Rs 1,20,000. Then for cash received, cash or bank account debit to Mr. B account, and the amount will be Rs 20,000. After that, for bill raised and accepted, journal will be bills receivable account 1 debit Rs 60,000, bills receivable account 2 debit Rs 40,000 to Mr. B account Rs 1 lakh. Remember, here two bills were raised and that is why we used bills receivable 1 and 2 separately. I hope you know the rule of the journal entry. If you have doubt, you can follow our separate video on journal entries. Now in the books of the drawee, that is Mr. B. For goods purchased, Mr. A sold the goods to Mr. B, thus it is purchase for Mr. B. Journal will be purchase account debit to Mr. A account, Rs 1,20,000. Then for cash paid, Mr. A received cash and Mr. B paid the same. Journal will be Mr. A account debit to cash or bank account, Rs 20,000. Now for bill accepted, just opposite to the drawer account. Mr. A account debit Rs 1 lakh to bills payable account 1 Rs 60,000 and bills payable account 2 Rs 40,000. Now the next part of the illustration. Mr. A endorsed the first bill to Mr. C in settlement of his account Rs 60,200. It means Mr. A need to pay rupees 60,200 to Mr. C, but instead of making payment, he endorsed the first bill for rupees 60,000 to Mr. C. Thus, Mr. C will recover his money. It's fine. But what about the balance amount? That is rupees 60,200 minus rupees 60,000. It is 200. As Mr. A settled the account of Mr. C, we need to consider the balance amount as discount received for Mr. A and discount paid for Mr. C. The journal entry in the books of Mr. A will be Mr. C account debit the full amount, that is 60,200. To bills receivable account 1 60,000. To discount received account rupees 200. Then the journal entry in the books of Mr. C will be bills receivable account debit rupees 60,000, discount paid account debit rupees 200, to Mr. A account rupees 60,200. For this transaction, no entry is required in the books of Mr. B, that is Troy. Now the second bill was discounted from bank at the rate 12% per annum. It means Mr. A discounted the second bill of rupees 40,000 from bank and received the amount before the due date after deduction of discounting charge at the rate 12% per annum. First, we shall see how to calculate the discounting charge. It is 12% per annum. The bill was raised and accepted on 1st April 2023 and Mr. A discounted the bill on the same day. We know the bill was raised for 2 months. It means it will be payable as on 4th of June 2023. If you don't know the rule for calculation of date for bill of exchange, please refer to our earlier video on bill of exchange where it has already been discussed in detail. However, it means Mr. A has discounted the second bill before 2 months of the due date. So the calculation of discounting charge will be 40,000 into 12 by 100 as it is 12% per annum into 2 by 12, that is for 2 months. So the amount will be 800. Okay, now let's do the journal in the books of Mr. A. Bank account debit rupees 40,000 minus 800, that is rupees 39,200. Discounting charges account debit rupees 800. To bills receivable account 2 rupees 40,000. Again, for this transaction, no entry is required in the books of Mr. B. Fine. Then the next part. On the due date, both the bills were dishonored. Mr. C has paid rupees 200 and bank has paid rupees 150 as noting charges. We can see that both the bills were dishonored. Hence, Mr. B could not make any payment against the bill. Now we shall proceed bill-wise. For the first bill, it was endorsed to Mr. C by Mr. A, and now Mr. C is not getting his payment from Mr. B against the bill. Apart from this, Mr. C has paid an amount of rupees 200 towards noting charges due to dishonor of bill. Let's do the journals in the books of Mr. A. First, you see the date of the entry will be 4th June 2023. That is the date on which the bills are matured. Mr. B account debit 60,000 for the bill value and 200 for the noting charge, which was paid by Mr. C but now will be reimbursed by Mr. B. Total rupees 60,200. Discount received account debit 200, which was received from Mr. C at the time of endorsement and we have credited at that time. But now when the bill was dishonored, it is immaterial and will be debited. To Mr. C account rupees 60,400, that is bill value plus the noting charges, both will be payable to Mr. C. In the books of Mr. C, just opposite to the earlier entry, Mr. A account debit 60,400, 60,000 for bill value plus 200 for discount plus 200 for noting charge. To bills receivable account 60,000, to noting charges account 200, which he has already paid. Now he will claim it from Mr. A. To discount paid account 200, which was given by Mr. C to Mr. A, but after dishonor of bill, it is immaterial. Again, in the books of B, the journal will be bills payable account 1 debit rupees 60,000, noting charges account debit rupees 200, to Mr. A account rupees 60,200, 60,000 for bill value plus 200 for noting charge, which will be paid by Mr. B ultimately. Now for the second bill. It was discounted from the bank at the rate 12% per annum, and Mr. A received the amount of the bill after deduction of the discounting charge before the due date, as discussed earlier. Now, on the specified date or due date, when the bank asked Mr. B for the payment against the bill, it was dishonored. Hence, bank did not receive the amount from Mr. B. Apart from this, bank has paid an amount of rupees 150 as noting charge. Thus, journal will be like in the books of Mr. A. Mr. B account debit rupees 40,150, 40,000 for bill value plus 150 for noting charge. To bank account 40,150. Means Mr. A needs to pay the entire bill amount along with the noting charge to the bank, and the same will be recoverable from Mr. B accordingly. Now the question is that at the time of discounting the bill, Mr. A had not received the full amount against the bill. We know that discounting charge was deducted by the bank at that time, but now Mr. A is paying the full amount to the bank. Why? Because discounting charge is the income of the bank against this service. The bank has done its job, and that is why it is justified that they must get their charges. Thus, Mr. A needs to pay the entire amount of the bill along with the noting charges to the bank. Now in the books of Mr. B, bills payable account 2 debit rupees 40,000, noting charges account debit rupees 150, to Mr. A account rupees 40,150. I hope you got it. Okay, now let's move forward. Mr. B paid rupees 20,000 and noting charges in cash and accepted a new bill for the balance amount at 3 months. He also paid interest at the rate of 18% per annum on the balance amount in cash. So what will be the journal entries? Let's see. In the books of Mr. A, Mr. B paid rupees 20,000 and noting charges in cash. Amount of noting charges are 150 plus 200, that is 350. So total amount will be 20,350. We shall pass the first journal as cash or bank account debit rupees 20,350 to Mr. B account rupees 20,350. Then Mr. B accepted a new bill for the balance amount at 3 months. What is the balance amount? The first bill was for rupees 60,000 and the second bill was for rupees 40,000. So altogether rupees 1 lakh. Out of this, he has paid in cash rupees 20,000. Thus balance amount is 80,000. The journal will be bills receivable account 3 debit rupees 80,000 to Mr. B account rupees 80,000. Okay, now he also paid interest at the rate 18% per annum on the balance amount in cash. Let's calculate the interest amount. Balance amount of the bill is 80,000 and the bill raised for 3 months. So the calculation will be like balance amount into rate of interest divided by 100 into number of months divided by 12. That is 80,000 into 18 by 100 into 3 by 12. That is rupees 3,600. Now the entry will be cash or bank account debit rupees 3,600 to interest received account rupees 3,600. Now let's see the journal entries in the books of Mr. B. Mr. A account debit 20,350 to cash or bank account 20,350. Then Mr. A account debit rupees 80,000 to bills payable account 3 rupees 80,000. Interest paid account debit 3,600 to cash or bank account 3,600. This is for the interest paid. Again Mr. A endorsed the new bill immediately to Ms. D. Entry in the books of Mr. A will be Ms. D account debit rupees 80,000 to bills receivable account 3 rupees 80,000. And entry in the books of Ms. D will be bills receivable account debit rupees 80,000 to Mr. A account rupees 80,000. No entry is required in the books of Mr. B. Now here is the main part. On the due date of the new bill, Mr. B became insolvent. Means on the specified date, Mr. B have liabilities more than his market value and he is not capable of making payments to his creditors. As an impact, Ms. D will not get her payment against the bill. The journal entry in the books of Mr. A will be Mr. B account debit rupees 80,000 to Ms. D account 80,000. In the books of Mr. B, the journal will be bills payable account 3 debit rupees 80,000 to Mr. A account rupees 80,000. And the journal in the books of Ms. D, just opposite to the earlier entry, Mr. A account debit rupees 80,000 to bills receivable account rupees 80,000. Now the last part of the illustration. Mr. B ultimately paid to his creditors 50 paise in the rupee. As I told, being insolvent, Mr. B is not in a position to pay his creditors, but ultimately he managed to pay 50 paise in the rupee. So what will be the amount? The calculation is so simple. 50 paise in the rupee means 50% of the outstanding. If it will be 40 paise in the rupee, then it will be considered as 40% of the outstanding. I think you got it. Here it is 50 paise in the rupee, that is 50% of the outstanding. We know that the outstanding amount is rupees 80,000. Hence the calculation will be 80,000 into 50 divided by 100 equals to 40,000. So Mr. A received 40,000 against the third bill from Mr. B. It's fine. But what about the remaining amount, which could not be recovered from Mr. B? It will be treated as bad debt. Now let's pass the entries. In the books of Mr. A, cash or bank account debit rupees 40,000 which is received. Bad debt account debit rupees 40,000 which is not recoverable. To Mr. B account rupees 80,000. and in the books of Mr. B, Mr. A account debit rupees 80,000, to cash or bank account rupees 40,000 which is paid, to deficiency account rupees 40,000 which could not be paid. That's all. Thus we can solve any illustration of bill of exchange with insolvency.